Welcome back, everyone. Another edition of Buy or Sell. What the hell? I'm here. Today is July 11th, 2018. Here with Alec and Brendan again, as usual. What's going on, boys?
Good morning.
Yeah, what's going on?
We let's talk about price real quick. We got 1-0 here. England playing Croatia in the 27th minute. But we also had Bitcoin fail at 6,800 this week, which we talked about last week was the big pivot. So just to give the listeners maybe a bit of a visual, I know it's kind of hard to do, if you're just listening to this, but if we're looking at the cash market, I have a chart of Bitcoin up on the GDAX, and so we had a double bottom last week at 5,800, and we then bounced to what we call a lower high within the intermediate term trend, and that 6,800 was the pivot. It was actually right in front of our pi line, which is a cyclical concept we use. So we bought some futures well, and we've talked about that. I think we did a good job being pretty bullish the last 2 weeks prior, when futures were down around 5,800. Brendan, I know you added to some that we talked about. And so I actually lightened up on a half to 3/4 of the futures that we bought as we kind of moved into 6,600, 6,700, and then actually got lifted on some cash or the actual Bitcoin coins at the 6,800 level. And then now we've backed off. So we're trading 63.52 as we speak, and we're kind of back into this sluggish sideways, not a lot of price movement, and then it seems like a few big orders go off, or we get maybe it's institutional money that comes in and needs to do something, or buys a few big blocks, and we kind of get this knee-jerk reaction. But I think largely we're still kind of waiting for the summer to be over and kind of complete some of these longer term cycles that we've been talking about. What are your guys' thoughts?
Yeah, I look a little bit longer term, and when you see the chart, you see about 3 times testing that bottom. I think it's kind of clear, and then you have just the whole collection of news recently. You have Coinbase adding custody. South Korea just flipped for I think the 10th time, and now they're allowing cryptocurrencies and regulating them. I'm not too sure how much weight this plays in from a fundamental level, but the U.S. project raised $4 billion in Ethereum, right? And they finally just finished dumping that Ethereum on the marketplace, as in their contracts are now empty of Ethereum. So they had that $4 billion they've been unloading in the marketplace the last, I think, 4 to 6 months.
Of Ether.
Yeah, so I don't know how much that really attributes to the entire marketplace, but that's a lot of Ethereum to continually dump on the price.
Yeah, that's definitely a lot of Ether. I think Ether held up pretty well considering
it did. Yeah,
you got that big of just a seller in the wings.
Yeah, and I think just a collection of all that stuff is looking more long term. I think this next run's going to be a little bit quicker than people realize. This stuff just adding up. I mean, I don't understand why people are still calling for sub 5K on Bitcoin. I mean, people are calling for 1K. I don't understand why you would do that, or why you would think that. Besides some line on your chart, I guess I don't know.
Yeah, that doesn't make sense to me. I'm kind of with you. I'm not as active in the day trader and within these coins. And right now with Bitcoin sitting at 6350 ish, it is kind of a nice near term kind of flow that we've seen over the last week. I'm not buying this level just yet. I'm going to wait and see if we can get a little bit. If we fall down closer to 6, I'll be re-adding to some of those positions. On the Ethereum note, though, I think that's a fantastic point. Over the last month, it's down 15%. I think that where it's currently holding, I still see a little bit of still see some areas where I think we could, if it dips below, I'll look to get back involved. Maybe closer to 400, 415.
Yeah, still holding on for a little bit lower then, huh?
Still holding on for just a little bit lower. I just don't see much of a sense to rush into anything right now. Just seeing, if you just take the last couple of weeks and look at the price action and volumes, I think it's kind of floating within that range. I think Jason did a great job calling out the 6,800 ceiling, and where is that next kind of floor? And I think six still stands out pretty loud to people, so we're kind of right here in the middle of that range. So I'm going to be a little bit patient. I'm going to wait to see if it kind of drops a little bit more. Again, I still have my tranches I have not put to work, but I've been on the road a lot the last little bit, so I've just kind of been keeping up with the daily price movements without the itchy trigger finger.
And I like, Brennan, how you probably mentioned, you said the word patience there several times, and that's exactly kind of how you got to play these intermediate term downtrends. I mean, we've just been slowly, every rally has just been met by a lower high. The last time we held 6,000, we rallied to 10, but then, we sold off for a couple of weeks. You had a little bit of a bounce to 7,800. Then we sold off. You had a little bit of a bounce now to 6,800. So we definitely have plenty of chances to kind of buy the stuff you like. And so I'm right there with Brennan also. We had a daily cycle that came into this week very high, and that's rolled over. You also have a 4-hour cycle that's pretty high. So all the stuff that we were long 2 weeks ago, we lightened up on this bounce, and we're being patient on putting that back out. But I think at the same time, I think a lot of the bears, it's like this is giving them hope that they're going to get this. For whatever reason, a lot of people want to try to pick 5,000 as this target. And we saw a bunch of people opening up BitMEX accounts and wanting to start shorting, and they were doing all this stuff with us below 6,000. I mean, from a timing perspective, there's just the sentiment seems to be people want to be aggressively short now, which we're completely in the hole when you compare where we've came from, 12,000, 19,000. So I don't know. We may have to trap the bears again. But if we get closer we get to 6, we're going to be adding back again. 5,500, same thing.
Yeah, you're damn right. I didn't get filled in my 5,500, which I was bummed about. But again, I wasn't staring at my screens all the time. But when it broke 6, and and if you are a bear and you're listening to everyone saying 5,000 is the next stop, I didn't. You saw this. You saw minimal sale pressure, but I felt like I read the tape to have obviously more buyers and sellers in there, which obviously is evident because it rallied back up to 6,800. But there wasn't a lack of confidence on the buy side of the market to to allow to sink that low. So high 58, high 5,000s, I like it. I'll wait for the market to tell me otherwise, but I think you can get caught in a trap and over trading some of these little moves. And while looking at the last week down 4%, that's $271 in BTC. Well, I'm not playing for a percent here and there, and I think you can kind of get lost in the weeds by trying to do something like that. I think Jason, we always talk about a little bit larger levels, that would be meaningful to kind of trade in between. And sometimes you can over trade a good theory or a good thought process, and you'll just churn away some of your possible gains.
Yeah, that's kind of what I was going to ask before we get into the news. Is you kind of brought it up. How often do you really trade, as in position changes? Because I feel like a lot of people try to scalp these markets and intraday trade way too much, more than these markets pretty much warrant from a volume and volatility standpoint. I just can't see it being profitable over the long term with the how prone to sudden movements of, not manipulation, but the fact that some of these order sizes are able to push the market around so easily right now still.
Yeah, I agree. I mean, everybody has a different definition. I think there's probably some younger traders that they're crypto traders, but maybe they haven't traded a lot of the other traditional markets. Probably they haven't traded it professionally, which is okay. It's just that, if you really want to talk about professional prop trader or someone that trades directionally for a living, I don't see the crypto markets as a market you day trade. Like, when I say day trade, I mean you can sit down, make $1,000, $2,000, $5,000 in 30 minutes or an hour. Or, there's a lot of traders that will just trade the stock open, and they trade from 9:30 and they're done it by 10:30. I don't know how you can do that in crypto. I mean, sometimes the market doesn't move, but if I want to get filled and I want to trade some size to make some money on, a 30 point or 40 or 50 point move in Bitcoin, I mean, first of all, the leverage isn't there to make it worth your while. I mean, you're going to sit down and you could put up 25 grand on the Forex market and you can trade with 2.5 million. You can trade 50 times leverage or 100 times leverage. And that's what you want when you're day trading. But
Mm-hmm.
to put up your entire account where you don't have I guess some guys are using BitMEX. But when I think about a day trade, I mean, I can look at a series of 5-minute candles. Maybe there's 3 of them. So you're looking at a chart, you have a rally, there's 3 bars up. Okay, I can get inside of that next pullback that might only last 5 to 10 minutes, and I can put bids in the below the market. I can get filled, and then on the slightest 1-minute pop, I can start getting lifted and come out of my position.
Mm-hmm.
To try to come out of something in the crypto, I mean, sometimes it just takes all day to try to get lifted on a level. So we don't do that with our guys that want to day trade. I think you're better off trading Forex. You're better off trading stocks or futures. But that's going to change. I mean, for the most part, we've just been position trading and swing trading. I mean, sometimes I'll buy futures and if we have a big pop, then I'll come out of it maybe in the same day. But the other thing I had to think about too is there's a lot of retail traders. I know there's a lot of gray area as far as crypto goes, but there is day trade, um, pattern day trade rules, and so that's the type of thing you got to think about. It applies to if you got an account at E-Trade or Schwab or whatever. It doesn't quite apply to our markets yet. That kind of killed the prop trading business at the .coms when you had a lot of these prop shops where people were day trading with the tech boom, and a lot of those prop firms were making a ton of money and then they changed that day trade, that pattern day trader.
Also, back then you're trading in fractions, right? Where the spread's 11 cents, and then as soon as decimalization happened, you have 5 cents and less. So there was a greater margin, to be made in those types of markets. But where liquidity is, I think at these points, I don't know. I feel like it's a waste of my time to sit there and try to day trade these markets for $50, $100. It's I'm not playing it for a percent move or a 2% move. I'm looking at it a larger. I'd like to think of it more of like a 5 to 10% move, or where those really or whatever that particular coin allows, like where the cycles live. I look at it a little bit of a larger picture, and largely because I just don't care to sit there and day trade anymore. I traded so aggressively my entire career. I'd like to. Maybe it's me being, in my late 30s that gives me a little bit more patience and understanding of something. But I also, I've seen a lot of times, me personally, a lot of my buddies, and even within some of my funds, if you trade around a position too much, and a news event comes out and that thing makes a big move, you're not positioned. You don't have your full order size in which you'd like to capture a lot of those gains. So there is that element of risk too, that if something does happen, you're getting lost in the, weeds because all you're seeing are these little ticks, and you move away from, what happens if you go in overnight and you're a little bit lighter weight than you want. Something happens and it's trading while you're sleeping or at a dinner or a lunch or something, and then all of a sudden you've missed it because you were trying to pick up all the pennies. Like, I'd rather pick up the dollars.
Right, that's very true. And then you get caught. We saw that happen. We saw that happen in our room. Some guys just got way too leveraged up, short in the hole, and then it took them almost a month just to try to get back to break even. Well, you think about that. You tie up all your buying power in that one trade because, again, just to Brennan's point, you're so focused on trying to make, leverage up for a little 5-minute move that it goes against you so fast. Now you're just caught. You have no buying power to buy the names you like on the pullback. You're stuck just trying to nurse one position, and then you're really hoping. No, hope's not a risk management, process.
No, you get caught chasing.
Well, I think it is. It's just not a good one, right? Well, let's move to the more institutional side then. Over the weekend, Europe's largest trader of exchange-traded funds is moving to crypto, is what the headline read. So, what jumps out at you guys reading that headline, seeing one of the largest ETF traders moving into crypto on the news recently? Also, that the CBOE applied for a Bitcoin ETF again. I'm not too sure how many times that's happened, but it'll be interesting if it's rejected or not. I mean, it's pretty important news because even if it's rejected, they still have to provide some sort of clarity as to what is needed to approve one. And that date is August 10th to watch.
Okay, well, that's good to know. Brennan, I'll let you go first. What did you think?
Yeah, when I read that article, it's I guess I'd have to do a little bit more homework as to what the strategy would be for flow traders, in doing something like that. But I think it's additive for all of us. They're going to add levels of liquidity, to the inside markets, especially for those day traders that are going to move that way. But the ETF, I think this crypto space is begging for for ETF options, for people to get into, and find ways of, if you're a little bit more passive, or if you're just not going to, be the type of guy that's going to sit there and trade on a daily basis, having options at, an ETF, or exchange traded funds, within the crypto space is probably ideal for a lot of people. I would certainly put, some money into it.
Yeah. I mean, I think people are just wondering, I'm personally wondering, is when you're going to be able to simply just allocate some of your 401k to a crypto, to a Bitcoin, to an index, I know Bitcoin and crypto is all about being your own bank, but really, when you think about it, it's just us that have that option, right? Everyone else, I mean, an ETF is pretty much the only way they're ever going to own Bitcoin. Well, at least with the current, security measures that you have to. I mean, you have to be pretty much a cybersecurity expert in order to, to hold any sort of real large amount. The average person doesn't have any interest in doing that. Well, they have full-time jobs. They probably have hardly any time to do anything else.
Yeah.
Yeah, and it's all about diversification, right? I mean, that's the advantage of these types of things. You want to be diversified as best you can in any investment vehicle that you're in, be it stocks, bonds, crypto, whatever. But I think you bring up a fantastic point, Alec. What does that look like for the markets if somebody can invest money in their 401k or their retirement account, into crypto? That's gonna be, in my opinion, I think that's gonna be a massive amount of money that comes into the space. Again, adding more liquidity, which I'm a massive fan of. And I also kind of couldn't help but think back to what happened to the marketplace as soon as everyone was allowed to buy Bitcoin on their credit cards.
Yeah. Mm-hmm.
Yeah. There was a lot of buy power out there. People saying, "Oh, I'm not really exposing myself to, actual cash out of pocket. I can trade this thing and be done with it, and my credit card statement will relate it." It kind of feels like Vegas money, right? I mean, it's a longer term thought process.
It's a different way to get levered up.
Yeah,
exactly.
Yeah. I mean, I don't know how you see it, Jason, but I see that there's not a lot of selling pressure in these markets right now, with the amount of people that hold the entire philosophy of holding. There's just not a lot of selling pressure, and having to buy up the underlying asset in order to issue an ETF. I mean, I feel like that's a sort of buying pressure we need to see all-time highs, at least.
Yeah, no, absolutely. I mean, that's part of why we started Block Edge Capital was we realize this is a brand new asset class, and there's going to be demand for digital assets for, for the long term. And that's just another thing that we need to see happen. I mean, I guess you could, if you could direct, depending on maybe the company you work for, you could go in, and if you have the discretion of what you want to buy within your 401k, I mean, technically you could buy that, the Grayscale product right now that the trades like with a 30% premium above.
That's what I was about to say.
What's the ticker on that one? BT.
I don't know. I just saw that premium, and I was
it's GBTC. Their listeners might have to double check us on that, but GBTC. But yeah, I mean, that was kind of the first step. They're trying to bridge this gap. I mean, we'd like to have some funds, obviously, that people can invest in also. But then we got to, they're still figuring out the mechanics. Like, Brennan, maybe we could talk about this. I mean, we had a call with, probably don't want to name names, but some of your buddies and colleagues in the space at a big asset management firm out of New York, one of the biggest of the big, and they kind of ran down, you know, are we calling it a security? Are we calling this stuff securities or not? It is going to have a big impact on whether or not the ETF community can fully participate. Because if it's not a security and technically on the equity side, then you're going to have a lot of these ETFs or a lot of these fund flows won't be able to come in to those particular ETFs. That's not to say that, if you buy the gold ETF, yeah, it's regulated by the CFTC for the most part because you're buying into actual gold or commodities product. I don't think that would matter. I think you could have several Bitcoin commodity classified ETFs, and it would just be like when silver was ripping, everybody wanted to buy the SLV. You know, Brennan, maybe you got something to add on that point?
Yeah, so some of the guys that I've just been talking to, especially was talking about ETFs within this space. I don't think that there needs to be one leading ETF that just is the only way. I mean, I think it also opens the door for a lot of, investment minds to come in and say, listen, if we can start to create ETFs, the way that I evaluate the market, the way that I value coins and risk, anybody could really come out and create their own, right? This one company that I'm meeting with next week, has done that. And I think that and I applauded them for it. I think it's such a great idea. Now, somebody might look at the weightings, within that ETF and maybe they disagree, or maybe they agree with what they're doing. But I think it just opens the door to possibility of other people coming together and say, I have a different view than you do, and and I think the weighting should look like this, based on whatever your risk tolerance levels are. And so I think every time I hear anything about an ETF or the possibility of these things getting created, I mean, heck, it's not outside of our realm to create one, that we believe could, or several, that we believe could fit the risk tolerance of particular investors, whether they're in their 20s and they've got they should have a lot of risk tolerance, built into them, or whether it's somebody like my dad that has less risk tolerance built into him, but it wants a piece and wants the action. Yeah. So, the weighting of the coins inside of a lot of these ETFs is, again, a good way for someone who's not an active trader to get involved, get some diversity, and, and play the game and start paying attention to what's going on.
Yeah, it really just comes down to the regulatory red tape, back office stuff at this point. It just takes a while. I mean, I remember listening to an interview with the gal, I can't remember her name, that started the Spider ETF. I think they call her the Widow, something cute, some play off that. But she said it took her forever for them to get that thing approved, and the regulators have put their stamp of approval on it.
Yeah, and a lot of those guys don't want to go out of their own comfort zones in order to do something like that. But as things come up and it becomes more normalized, I think it'll be a much easier process to go through. But right now, you probably have to be a who's who within the industry in order to get something like that done.
Yeah. I mean, since the last ETF, I think the Winklevoss twins were the last ones to ask for an ETF approval for one. And I think they were denied because of something along the lines of easy manipulation in the marketplace. But I think a lot has changed since the last time. We've looked at the recent regulatory clarification, Bitcoin and Ethereum, whether or not securities, commodities. I think that's kind of clarified. I think that's going to help. I think it's kind of curious. I don't like playing any sort of news items, but it's kind of interesting to see that August 10th deadline for making that decision, and what sort of price action we're going to get between now and then. I mean, it kind of seems like a rally is kind of inevitable. I don't know how big a one, but it seems like we've kind of built up that solid base the last couple of weeks, and I don't know if it's going to be one of those buy the rumor, sell the news, but I don't know. Hoping we don't actually have to sell the news in this case, but
yeah, I think it's just really more of a time time factor. We had a massive rally, maybe one of the greatest bull market runs in the history of markets, and just going to take some time to digest it. Maybe this longer term wave, this cycle that kind of turns here at the end of July and August, will be interesting to see if the price starts to kind of turn and have a directional change with that cyclical turn. That's kind of what we'll be focused on month end. The volume, I was just looking at the volume while you guys were talking. Really, no change there. I mean, if you just look on the GDAX exchange in December, we were running an average of 40,000 BTC, 40,000 coin a day. And now we're doing 1/5 of that. And I think we're averaging like 7,000 coin a day. So it's just completely fallen off a cliff. So no change there.
It's interesting. And just one last thing too is when I keep talking about this base of news and just general sentiment building. I mean, within the last week alone, I just checked all the dates on these, and between the last show we recorded, I don't know how many days ago that was, but Gemini brought on their new chief information officer from the New York Stock Exchange. Facebook, one of Facebook's engineers just became director of engineering blockchain. Google, the Google co-founder, he hopped on.
Facebook's doing a blockchain?
Yeah, well, I think one of the senior developers became director of engineering blockchain. So,
is that a company? Engineering blockchain?
No, of engineering for blockchain. I think the company's blockchain.
Oh, but still working for Facebook.
I'm not too sure. I had to read into that a little bit more. And then we had, I don't know if you guys saw that panel. It's kind of like an impromptu guest speaker, I guess. Part of the panel was the Google co-founder. I forgot what his name was, but he pretty much said that he mines Ethereum with his son. So that's kind of interesting. And then I don't know if you
set up.
Yeah, right. And then you had the Swiss. They plan to launch their first cryptocurrency exchange. So I think that's just all that news has just happened within the last few days alone. I think that kind of just says that the momentum is building. If all that stuff can happen within a few days, that sort of talent in traditional markets, changing over to blockchain and crypto.
Mm-hmm. That's a lot of news items, more than I can keep up with.
Yeah, I figured we might as well list them off because there's so much happens within these few days of recording. Can't even keep up with it.
It's true.
Well, I mean, do you guys have anything else to add today?
No, I would try to keep these podcasts a little bit shorter and maybe allow us to do some more frequently. I do want to think maybe in the next episode we'll talk a little bit about Vitalik's comments on, he made a pretty strong comment about how the centralized exchanges probably need to go, burn in hell, which I kind of think we've talked about that longer term. I mean, we're building Rhythm with that same philosophy in mind, that a lot of what we're trying to do and accomplish here in crypto is to decentralize a lot of the centrally planned systems that have failed or have become so corrupt. But that's a whole nother topic. Yeah. Do we just want to hit on that next?
Yeah,
next
I mean, we can hit on it now. Just to be clear, too, he kind of clarified, and I mean, it's kind of taken out of context, but he still means that. It's just there's still a need for centralized exchanges. There needs to be an interface between fiat and crypto, right? That isn't decentralized yet, and I don't know how that could become decentralized, completely decentralized, but for crypto to crypto exchanges, I mean, there's clearly an advantage for the trustless exchange of assets.
Yeah,
there's no reason why it shouldn't be.
I mean, I see it as that's kind of the bridge that needs to be built right now, just to further the space, to move this asset class along. But I think philosophically, I mean, you could really get deep into, when you listen to Novogratz talk about how we really need a custodial relationship that the pension system already feels comfortable with, instead of going with something like Bitco or some of these other crypto specific custodians. But I don't think long term that's the goal. I mean, I've seen what's happened, Brennan. You've seen what's happened with. I mean, on the one hand, yes, if I'm trading billions of dollars, do I want to go through a clearing firm that has more than a sufficient amount of capital that's been in business for a long time? Yes. Trading with those pros makes sense for a lot of reasons.
Absolutely.
But at the same time, we've seen what's happened with the MF Globals of the world, where customer funds were being traded illegally, recklessly, basically stolen. Corzine's over there trading Greek bonds and completely blowing the firm up and losing all these customers' money. That wasn't supposed to be happening. The Madoffs of the world. I mean, did the people of Connecticut and the firefighters of Connecticut invested in that pension fund that lost everything? I mean, was that really that custodial type of relationship? Is that really a secure thing that we should be striving for? I don't think that's what we were trying to do when Satoshi came about with this idea of, hey, central the money center banks, central banks, centralized government, all this stuff has just gotten so corrupt that, I mean, why can't we have? There's no reason why a pension fund can't be in control of their own private keys. I mean, it's just, I think that's where we need to end up.
Yeah. Yeah, I think right now, like we talked about earlier with the ETF, right now it takes an incredible amount of knowledge to safely secure any large amount of asset, right? I think that's kind of what's holding it up right now, and I think that's why they're pushing towards these custodian models. But yeah, that's not the long term, and I think those that understand that,
Yeah.
I think there's going to be a shift. It's just we're just still really early, and I think we're going to see that naturally happen.
And the established institutions are going to argue, what do you mean? You guys get hacked constantly.
Oh yeah,
Like, what's the, okay, yeah, maybe MF Global or a Madoff's once every 30 years type of event, but you guys are getting hacked every week.
yeah, I know. Yeah, I think it just shows how early we are. That people still we kind of need that custodian model in some cases. I think it just shows how early the tech still is. That security is still such a difficult thing to accomplish well.
Yeah, and it begs for cybersecurity protections, and I think it'd be a valid argument for companies to go public, and I mean, it depends on what they kind of really want to release. But we've talked about recently, as we build out, Rhythm, and even though we have the bring your own wallet technology with a lot of these things, I mean, how exposed are we to somebody coming in, and exposing it? And our company is actually hiring hackers to come in and do sensitivity testing to see where they are vulnerable, so that when you release a product and you have clients who are economically invested in your venture, have you gone through the appropriate steps, and is it a constant, quarterly, annually? How often do you have your data tested to
Yeah.
make sure that you're secure as absolutely possible? Because this is obviously a problem within the space, and I think the consumer, the consumer or participant in any of these coins or companies, would probably like to hear, hey, you guys have gone out of your way and continue to go out of your way on a consistent basis, and hiring a hacker to come in and test your sensitivity levels within your company and see where you're weak, so that you can build out strongholds to defend against those types of operations.
Yeah. No, Brennan, that's a great idea. It just made me think of like the credit default swaps market. We should have a credit hack swap market. So you go in and you say, "Oh, really? You guys want to build your company around the EOS blockchain? Not really proven. Got a lot of issues. We look at your balance sheet. We look at what you guys are really doing as far as security goes, and you could actually probably create some sort of contract like that would trade where." All right, this is going to trade at a lot higher premium because the odds that you guys get hacked is pretty significant. Or you could look at like a credit hack swap for something like Bitcoin. You would think would trade pretty low. Maybe that's an idea I just had.
Yeah, I mean, at the very least, all this will upgrade, have everyone take a second look at their IT infrastructure and maybe do some upgrades that have long been needed.
Yeah.
Who cares if some data is leaked, but if someone's funds are all taken, or if your funds are all taken, that's a whole different story. So,
yeah, you got to be able to defend the people who invest in your companies, period. And the more news I read about it, about companies getting hacked, coins getting taken, correct me if I'm wrong, and I know I'm not as well read in this space, Alec, as you are, but I don't see anybody selling the idea like, hey guys, we are actually actively going through these things, and maybe some of these companies just rush to get to market too quickly, without the thought sensitivity of what's worst case scenario.
oh,
Because there's no insurance companies that I know that want to defend, that want to back these types of losses.
oh yeah, I mean that's definitely the case, and that's a huge point of contention between the top projects in the space right now is what do you give up in return for coming to market quicker, right? What sort of trade-offs do you make for the way you program and create your infrastructure? The trade-offs are always between safety, decentralization, speed, efficiency, the transaction time. It all comes down, and you have to make trade-offs. So some of these are a little more secure than others, but some of them are faster and able to implement things different. I think it all just comes down, and the market will probably decide on which ones are sound and which ones what they're really worth based on those trade-offs.
Yep.
But I mean that's also why auditors are able to charge as much as they do right now, because there's not a lot of them that have that good of a reputation when it comes to these sensitive digital assets.
Mm-hmm.
I mean, auditing any sort of project when it comes to blockchain is a ridiculous amount of money, but that money's well spent if you choose someone with a very, very good, very good name in the space, because there's not a lot of them that are prevalent in, this type of security.
Exactly. And that's why I love that we are having those conversations with hackers, and what it would look like as we build, out our platform, and what it would look like that, how we can protect our investors, and I love that we're going that route, and I think that's something we as we move forward, something we'll certainly talk about to people. I think it's a fantastic point that people just want to know about, and want to, in an insecure crypto space where if it's gone, it's gone. You at least know that the company that you're investing in is actively pursuing to do the best that they can, in protecting your assets.
Yep. Or designing something where we don't have to protect your assets, right?
Exactly.
Well, I think that's a good point to wrap it up.
Yep. Great show. We'll go watch the second half of this England game.
Yeah, that's what I was about to say. Trying to get you guys off.
Still 1-0.
40 minutes left, I think. All right. Well, until next time, guys.
All right, boys. Thanks.
Take care out there.